Maybe I'm biased by having a front row seat, but I think over the last 30 or so years, I'd say the market is somewhat less efficient than when I started.
Technology and AI is part of us being better at what we're doing. What you're not hearing me saying is that AI is suddenly going to make investment decisions. We will deploy technology to make us better at what we do, rather than to replace what we do.
You think about all the building blocks necessary for AI, you might stumble on real estate with data centers or utilities with power. I find the power is really interesting.
So let's hear it from you. Where do you believe cracks are, if there are any?
We're not seeing a lot of cracks. You know, I've been in the private credit market for almost 30 years. People need to appreciate most private credit instruments that we're all talking about are backed by some form of institutional equity ownership.
I think it would be impossible for us to ignore private markets and not think that there's a large opportunity set.
We think there's a big opportunity in credit. And what we want to do is just be all things credit. I don't think that the boom in private credit all of a sudden suggests that private credit is bad asset class.
There's a scarcity value. Sports teams are obviously operating businesses and they generate cash flow. Some of them don't. A lot of them do, but then it's also kind of a piece of art, right? At the end of the day, it's like, it's worth whatever someone will pay for it, right? So there's an element of a little bit of a Basquiat there or beachfront real estate.